Welcome back. The time on the clock, 8:19. And in your consumer news this morning, last year, tax filers received nearly $320 billion in refunds. Now, if you've yet to file, you may be a little anxious to learn how much money Uncle Sam owes you or how much you may owe him. Now, before you file, there are some important changes to keep in mind here. Vice President Josh Perkins from DeWitt & Dunn Financial Services is here to really discuss what you need to know and share some helpful tax planning strategies. Good morning to you, Josh. Glad to have you.
Good morning, Cleo. Glad to be here. Thanks for having me.
Of course. So what changes should people be aware of before they file their taxes this year?
Well, there's definitely a few different changes this year. So the tax brackets have been increased, meaning that you can actually earn more money this year and potentially stay in the same tax bracket or maybe even a lower tax bracket. So that's a good thing. You also have the standard deduction has been increased. So the standard deduction for a single filer is going to be $13,850, and for a married couple filing joint, it's going to be $27,700. So once again, a nice deduction there.
Yeah.
Now, one of the important things for people to understand is the difference between the tax credit and a standard deduction. There's some great tax credits this year.
Yeah, that's good to know. Why is it important maybe to think about your tax strategy year round?
Well, if you are able to do some planning ahead of time and sit down with a professional, look at your strategy, because so many professionals out there, Cleo, don't really look at the future. They're always looking at the past. And so if you could sit down with a professional and come up with a game plan that gives you the ability to reduce taxes by maybe taking advantage of some of the tax credits, such as the maximum earned income tax credit, that's increased for $7,430 for 2023. That's a significant tax break.
Is.
Also, the electric vehicle tax credit, you can earn additional $7,500 taken off your taxes for 2023.
Yeah, let's not forget about that. Hey, Josh, what are some ways that we can lower our tax burden?
Just doing some planning. So many people might think that it's best to put money into a tax deferred account each and every year, which is a good thing right now. You could contribute into an IRA and save yourself some money today. But maybe in the long run, that might not be the best strategy for you. Maybe it's better for you to contribute into a Roth account, which allows you to put money in after tax. Your money then grows tax-free, and you can generate tax-free income later on down the road. So coming up with a strategy and having a plan is always going to be the best bet. I tell my clients all the time, taxes is just a game, and you need to know the rules to the game. And so once you understand the rules, then you can actually win at the game and potentially lower your overall lifetime tax burden.
Or find someone that can really help you learn the rules in the game as well. How can someone reach out to you, Josh?
Yeah, you can definitely check us out on our website. That's DeWittandDunn.com. You can look at a lot of different helpful resources there and also chat with some of our advisors through our chat feature on our website.
All right, Josh Perkins, Vice President from DeWitt & Dunn Financial Services. Thank you so much for joining us this morning. Great insight.
Thank you.
All right.